The American car market just experienced the most dramatic collapse in over a decade, and if you understand what's happening, you're about to witness the greatest car buying opportunity of your lifetime. Last month, I walked through a Ford dealership in Ohio where the general manager pulled me aside and whispered something that should terrify every automaker in America. They had 400 vehicles sitting on their lot that nobody wanted to buy. Cars worth $15 million, just collecting dust and losing thousands in value every single day. But here's the shocking part. Just 3 months earlier, that same dealership couldn't keep cars in stock. Customers were fighting over inventory, paying above sticker price, and begging dealers to take their money. Then everything changed overnight, and now dealers are drowning in vehicles they can't give away. This isn't just one dealership having a bad month. Auto sales plunged nearly 10% in May alone, the sharpest drop in over a year. Vehicle imports collapsed by 72% compared to last year. And major automakers like Ford and GM have suspended their earnings guidance because they have no idea what's coming next. The entire industry is in freefall, and most buyers have no clue what this means for their next car purchase. What caused this perfect storm? How bad will it get? And most importantly, which cars should you avoid and which ones represent incredible deals? The answers will shock you, but they could also save you $20,000 or more on your next vehicle. The collapse started with what seemed like great news for the auto industry. In March, car sales soared to their highest level in 4 years. GM reported a 17% increase compared to the previous year. Dealer inventory tightened dramatically, dropping over 10% as customers rushed to buy vehicles before expected price increases hit the market. But this wasn't organic demand. It was panic buying driven by the announcement of 25% tariffs on imported vehicles, effective April 3rd. Customers were scrambling to beat the price hikes, creating an artificial surge that masked the underlying weakness in the market. By May, reality set in. The panic buyers had already purchased their vehicles. Interest rates remained brutally high at around 7% for new cars and 12% for used ones. And the average new vehicle price had climbed to a staggering $50,000, putting most cars out of reach for ordinary American families. The result was a market crash that caught everyone off guard. Monthly sales fell nearly 10% in May, dropping to a 15.6 million annualized pace. That's one of the largest monthly drops since the early pandemic shutdowns. Dealers who had been celebrating record sales just weeks earlier were suddenly staring at lots full of vehicles that nobody could afford. Here's what makes this collapse particularly devastating. The financing side of the car market shows just how stretched consumers have become. Nearly 1 in 5 new car buyers are now signing 84-month loans, locking themselves into 7 years of car debt just to make monthly payments manageable. The average loan term has climbed to 68 months for new cars, with used cars close behind at 67 months. But longer terms only mask the growing affordability crisis. With interest rates so high, buyers are paying massive amounts in financing costs. The average monthly payment is now $742 for a new car and $525 for used vehicles. These payments are pushing families to their breaking point and beyond. The evidence shows up in loan performance data that should terrify lenders. 30-day auto delinquencies are approaching 4%. Subprime borrowers are struggling most, with 60-day delinquency rates reaching over 6% in December, a record high. Total auto loan debt has exploded to $1.65 trillion, now exceeding student loan debt and accounting for over 9% of all consumer debt. Even worse, the tariffs that triggered this mess haven't fully taken effect yet. The 25% tariff on imported vehicles was just the beginning. Steel and aluminum tariffs have doubled to 50%, which could increase the cost of every new vehicle by $400 to $3,000. Ford has already warned of a $500 million hit to earnings from these tariffs alone. But here's where it gets really interesting for smart buyers. This collapse is creating massive opportunities if you know which vehicles to target and which ones to avoid at all costs. The biggest losers will be imported luxury vehicles and electric cars. Brands like BMW, Mercedes, Audi, and Jaguar are about to get hammered by tariffs and changing consumer preferences. A $77,000 luxury SUV could see price increases of $20,000 or more when tariffs fully kick in. But here's the key. Dealers are still sitting on massive inventories of these vehicles purchased at pre-tariff prices. This creates a perfect storm for buyers. Luxury dealers who are used to charging premium prices suddenly find themselves with inventory they can't move at any price. German luxury vehicles that held their value religiously for decades are about to experience depreciation rates that will make owners sick. Electric vehicles face an even worse situation. The EV hype that drove sales for the past few years is collapsing as buyers realize the practical limitations of electric transportation. Range anxiety, charging infrastructure problems, and brutal repair costs have created a reality check that's destroying resale values. Tesla, despite being assembled in America, still relies heavily on battery cells and components from China and South Korea that will be hit by tariffs. The models facing the steepest value drops include anything from struggling brands we've warned about before. Nissan vehicles, already plagued by transmission problems, will see their values crater as buyers flee to more reliable alternatives. Infiniti, Mitsubishi, and Chrysler products will become essentially worthless as their dealer networks continue shrinking and parts become impossible to find. But the opportunities are just as dramatic on the flip side. Toyota and Honda vehicles will become even more valuable as buyers realize that reliability trumps everything else in an uncertain market. The Toyota Camry, Corolla, Honda Accord, and Civic will hold their values better than any other vehicles as consumers prioritize dependability over luxury features. American trucks and subs from stable manufacturers represent another opportunity. The Ford F-150, despite containing 70% foreign parts, will likely see strong demand as buyers prioritize capability and brand familiarity. Chevrolet Silverado and GMC Sierra models should also hold value well, especially if you can find them at current prices before tariff impacts fully hit. The timing strategy becomes crucial for maximizing your savings. If you need a vehicle immediately, focus on models where dealers are desperate to clear inventory. Any luxury vehicle or electric car sitting on lots for over 90 days becomes heavily negotiable. Dealers pay interest on flooring loans for unsold inventory, and after 3 months, they're losing money every day a car sits unsold. But if you can wait 6 to 12 months, the deals will become even more spectacular. As the full impact of tariffs hits and consumer demand continues weakening, dealers will face a choice between taking massive losses or going out of business. The desperation will create pricing opportunities we haven't seen since the financial crisis. Here's what to watch for in the coming months. Vehicle imports have already collapsed 72% year over year, which means dealers won't be getting fresh inventory of imported models. The cars currently on lots represent the last opportunity to buy many vehicles at pre-collapse prices. European luxury brands will be hit hardest. BMW, Mercedes, Audi, and Porsche vehicles will see price increases of $15,000 to $25,000 once tariff impacts fully materialize. But dealers still have significant inventory purchased at old prices, creating a window of opportunity for buyers who act quickly. Japanese brands face a different situation. While Toyota and Honda vehicles will see some price increases due to component tariffs, their reputation for reliability will support demand even at higher prices. This makes them safer long-term investments compared to luxury alternatives. The electric vehicle market presents the most complex opportunity. Tesla vehicles assembled in America will avoid the worst tariff impacts, but they still face challenges from Chinese battery supply chains. Other EV manufacturers, particularly luxury European brands like Porsche and BMW, will see their electric models become prohibitively expensive. For buyers considering electric vehicles, the next 6 months represent a critical window. Current inventory was purchased at pre-tariff prices, but once that's gone, replacement costs will be dramatically higher. If you have home charging capability and realistic expectations about range, heavily discounted EVs could offer incredible value. The collapse timeline is accelerating faster than most industry experts predicted. Ford suspended its earnings guidance in May and warned of significant tariff impacts. GM withdrew its full-year guidance and paused stock buybacks, citing an uncertain cost environment. These aren't minor adjustments. These are panic responses from companies that have no idea how to navigate what's coming. By fall, we expect to see the first major dealership closures as inventory levels become unsustainable. Brands that were already struggling, like Chrysler, Infiniti, and Mitsubishi, will likely begin serious discussions about exiting the American market entirely. When that happens, their vehicles will become essentially worthless overnight. The broader economic implications make this situation even more urgent. With $1.65 trillion in outstanding auto loans and rising delinquency rates, we're approaching systemic risk levels not seen since the financial crisis. When consumers can't afford to buy cars, the entire economy suffers. Auto manufacturing supports roughly 10 million jobs across factories, suppliers, and dealerships. States like Michigan, Ohio, Kentucky, Alabama, and Tennessee face particular risk as auto production slows. Economic forecasting groups predict domestic auto production could fall by nearly 200,000 vehicles annually, leading to direct job losses that ripple through entire communities. But for individual buyers who understand what's happening, this collapse creates unprecedented opportunities. The The key is separating short-term chaos from long-term value. Vehicles from stable manufacturers with proven reliability records will weather this storm and potentially appreciate as supply tightens. Everything else represents a gamble that could leave you with a worthless asset. The smart money is positioning now before the full impact becomes obvious to mainstream buyers. Luxury vehicle prices are about to jump $20,000 or more due to tariffs. Electric vehicle availability will be severely constrained as supply chains reorganize, and struggling brands will begin disappearing entirely. If you're considering a luxury vehicle, act within the next 60 days while dealers still have pre-tariff inventory. Focus on models with strong reliability records and stable dealer networks. Avoid anything from questionable manufacturers that might not survive the coming shakeout. For mainstream buyers, prioritize value and reliability over flash and features. Toyota, Honda, and select American models represent the safest investments. Financing rates may remain high, but depreciation will be minimal compared to alternatives. The American car market is experiencing a once-in-a-generation collapse, but smart buyers who understand the forces at play can turn this crisis into the deal of a lifetime. The next 6 months will determine whether you save $20,000 or lose even more by making the wrong choice. Which vehicles are you considering in this chaotic market? Have you noticed dealers becoming more desperate to make deals? Share your experiences in the comments below. And if this market analysis helped you understand what's really happening, subscribe for updates as this situation continues evolving. The biggest changes are still ahead, and you'll want to stay informed. Thanks for watching, and good luck navigating the car buying opportunity of a lifetime.